You're listening to a production of the National Media Archive. To learn more or volunteer, go to nationalmediaarchive.com.
Have you ever wondered why the name BlackRock pops up everywhere in financial news? With 10 trillion in assets, yes, trillion with a T, BlackRock isn't just another Wall Street player, it's a financial colossus. The term asset manager might sound dry, but think of BlackRock like the conductor of a global investment orchestra, guiding trillions of dollars through the rhythms and storms of markets. But what's in a name? BlackRock was chosen to symbolize stability like a rock's strength and integrity. These aren't just branding buzzwords. They're the foundation of how the company wants to be perceived in a world where trust is currency. So, what makes BlackRock the powerhouse it is today? Let me tell you a story, one that starts far from the skyscrapers of Manhattan. Lawrence Fink, BlackRock's co-founder and CEO, grew up in sunny Van Nuys, California, in a middle-class family. Now, you might be thinking, how does a kid from California end up running the world's largest asset manager? The answer: relentless curiosity and a knack for seeing opportunity in complexity. Fink studied political science at UCLA and later earned an MBA, focusing on real estate. Financial acumen and grit were ingredients that would define his future. Ever heard of human capital? That's the idea that skills and experience are assets, just like stocks or bonds. Fink's early life was all about building that capital, one lesson at a time. When Larry Fink landed at First Boston, he didn't just dip his toes into finance. He jumped straight into the mortgage-backed securities division, a technical term for investments tied to home loans. Think of it as bundling thousands of mortgages and selling slices to investors like a giant investment pie. Fink turned this business from 0 to $1 billion in profit. But here's the twist. One risky bet led to a major loss, teaching Larry a brutal lesson about risk management, a fancy way of saying, don't put all your eggs in one basket. Ever had a setback that changed your life? For Fink, this was it. That loss became the seed for BlackRock's obsession with understanding and controlling risk. Picture 1988. Wall Street is buzzing, but investment firms are stuck in old ways. Larry Fink saw an opening. What if a company put risk management and technology at its core? Now, you might be skeptical. Was this really so revolutionary? At the time, absolutely. Fink assembled a crack team, including Robert S. Capito and Susan Wagner, who believed in blending financial know-how with technological innovation. Two technical terms come into play: portfolio diversification, spreading investments to reduce risk, and analytics, using data to make smarter decisions. It wasn't just about picking winning stocks, it was about building a toolbox for clients to understand and weather market storms. BlackRock's founding was the start of an investment revolution. Ever heard of Aladdin? No, not the magic lamp. This Aladdin is BlackRock's proprietary risk management platform. Imagine a supercomputer dashboard that shows you every twist and turn in your investment portfolio. Aladdin brings together data integration, combining information from everywhere, and scenario analysis, testing how investments would perform under different conditions, like a financial weather forecast. Now, you might wonder, isn't this just for the pros? Actually, Aladdin made sophisticated analytics available to a much wider audience. This democratization of data gave clients clarity and confidence, transforming how risk is managed across the industry. Suddenly, investors could see not just what they owned, but what could go wrong, and how to prepare. Let's fast forward to the 1990s. BlackRock started with a focus on fixed income assets, think government bonds and corporate debt, the safe harbors of the investment world. But soon, the firm expanded into mutual funds, equities, and more. Have you ever switched gears, realizing your initial plan was just the beginning? That's what happened here. Asset allocation, spreading money across different investment types, and liquidity management, ensuring money is available when needed, became core strengths. BlackRock's ability to pivot quickly, fueled by technology, attracted clients from every corner: retail investors, big institutions, even governments. The company wasn't just growing in size, it was building trust by staying transparent and adaptable. Remember 2008? The global financial system nearly collapsed, wiping out trillions in wealth. Most firms floundered, but BlackRock became a lighthouse in a storm. Thanks to its robust risk assessment tools and the analytical power of Aladdin, BlackRock was called in to advise governments and banks on how to handle distressed assets investments that had lost value but could bounce back with the right strategy. Now, some might ask, was this just luck? Not at all. This was years of preparing for exactly this kind of crisis. BlackRock's credibility soared, cementing its role as not just a money manager, but a trusted advisor on the world stage. Let me take you to 2009, when BlackRock made a bold move, acquiring Barclays Global Investors for $13.5 billion. The real prize? iShares, the world's largest suite of exchange-traded funds, or ETFs. If you're new to ETFs, think of them as investment baskets you can buy and sell like stocks, combining diversity with flexibility. This deal instantly made BlackRock the one asset manager globally, and a dominant force in ETFs. Market integration, bringing different products under one roof, and scalability, growing efficiently without losing quality, were the technical keys here. BlackRock wasn't just riding the wave of change, it was shaping the market's future. You might be wondering, what's BlackRock doing to stay ahead today? The answer: doubling down on sustainability and technology. ESG, environmental, social, and governance, the new pillars for responsible investing. BlackRock has rolled out digital platforms and funds explicitly designed for investors who care about impact as much as returns. And with Aladdin now an industry standard, clients expect real-time analytics and automation systems that run complex tasks without human intervention. This isn't just about making money. It's about aligning investments with the values and challenges of a rapidly changing world. BlackRock's shift mirrors a broader transformation in finance. Investing isn't just for profit, but for purpose. So, where does BlackRock stand now? With $10 trillion under management, its influence is virtually unrivaled, touching governments, corporations, and everyday investors. But here's the real question: what responsibilities come with that power? Corporate governance, the systems for directing and controlling companies, and systemic risk, the danger that problems in one area can spread across the whole system, are front and center. BlackRock is now at a crossroads, shaping not just markets, but conversations about climate change, economic inequality, and regulatory reform. As geopolitical tensions and market volatility persist, BlackRock's next chapter will depend on its ability to balance innovation with accountability. The journey isn't over, the stakes have never been higher.